delighted to share some of our perspectives on this topic. One of the things I'd start off by saying is that we definitely see that consumer expectations are driving innovation. Customers are becoming much more demanding, and their expectations are driving the digital transformation, certainly in our business. Certainly, if I think about my life, it's increasingly empowered by the new technologies. There's much more choice, but it also means that we're becoming much more demanding and much more choosy. The instant interaction culture is one of the key drivers. I love this idea of Kuva, is it? But whether it's ordering your cab online, I haven't yet got to be using Siri. I'm trying to learn how to use Siri or Alexa, but that interaction is what consumers want, particularly millennials and the younger generation. We're trained to expect things now, and we get increasingly impatient if we don't get satisfaction. And then, of course, you've got companies like Apple, Amazon, and Google who continue to raise the bar in creating amazing customer journeys. And the more those journeys get better, the more expectations we get. To meet these expectations, the payment industry has to innovate or continue to innovate. For American Express, as a company who invented the traveler's check nearly 130 years ago, who brought the world card-based payments, we're excited by this challenge. So today, what I wanted to do was share 3 trends where we see the increase in consumer expectations are driving digital transformation in the industry, and then 2 industry trends that we see as a result. So the first trend is around frictionless payments. Certainly our customers expect frictionless payments, but they want to be protected. How many of you love tapping your card or your phone? Or I particularly like just using my phone, getting my facial recognition, and then being able to purchase. It's made my not so good on my bank account, but it's something that makes it very easy for us. We live busy lives, we're always on lives, and we want our payments to be easy, to be seamless. Building frictionless payments is actually not too challenging, but building secure frictionless payments, thank you, is way more challenging. Innovating to manage fraud is increasingly essential. For us at American Express, we've been doing this for a long time, and we have probably the lowest fraud rates in the industry, sometimes up to 5 times less than our competitors. The commercial challenge of staying at the cutting edge of frictionless payments is clear. Customers are demanding it, but regulation is throwing up its challenges. So if we think about strong customer authentication, and certainly understand the basis for it in protecting consumers, when it comes into force in just less than a year ahead, it could actually make payments a little bit more challenging for customers. So when you go to your contactless, whether it's Pret a Manger or whoever you go to get your cup of coffee, you might have to use your PIN every 5th transaction, or you may have to use your phone more often to get a code to be able to support your online transactions. And that's not giving the customer the experience that they're demanding. The second trend is on personalized payments. People want things to be personalized, but they want them to be personal in the right way. In today's digital world, we know that customers prefer things to be tailored for them, and firms can do that. We have the data. But it's also becoming clear that things can get too personal. While don't be evil is a good ambition, don't be creepy is also important. So, when I go into my butcher's and they say, oh, did you enjoy your ribeye steak last week? That's great. They know my name. I go there often. But if I go into my supermarket and they greet me by my name and they tell me what I purchased last week or ask me what I want this week, it may get a little bit too personal. And so context is really important when we're delivering personal services. GDPR has rightly set a high standard for collecting and protecting users' data and provides an important framework to give consumers trust and control over the data that they share and how organizations use that data. And certainly we see GDPR exporting across the world, whether it's India or the US, where they're taking a lot of the lessons. As a consumer and as a company that relies on data to give customers better experiences, that's only a good thing. Of course, how GDPR interacts with open banking is going to be fascinating, and particularly how consumers perceive this. Open banking should mean that there's more data available to firms, but these firms need to focus on building any innovative ways of not just engaging with their customers, but building the trust. And some of the regulatory frameworks that Martin shared are going to be critical there. If we don't get it right, then it's not just legal liability that's at risk, it's reputational liability. And it's not just for the firms that actually don't get it right, it's for the industry. Earning, securing, and deserving people's trust is going to be the key to success moving forward. And how we deal with personal data is going to be a key part of that. The third trend is about experiences. People treasure experiences, not payments. If you break it down, a payment is really quite simple. It's moving money from one place to the other. Now, we can become competitive, we can become more efficient by doing it faster, cheaper, easier, more safer. But if you don't offer more, then you become less relevant. Successful companies will provide payments blended with other services to give their consumers, their customers, the experience that they value and cannot easily obtain elsewhere. Being able to get access to a hotel lounge, to an airport lounge, maybe because you're tired or you've got that last email to send, that's something that you can't easily get. Being able to get theatre tickets for the best show in town or get to the Champions League football match, those are things which sometimes money can't buy. So being able to provide that is going to be more and more critical. Finding innovative ways to use technology to develop and deliver these experiences to the right customer is what we're trying to do, and is a core part of every financial company's strategy. So those are some of the trends that we see from a consumer perspective. In terms of how industry responds, I think there are two themes that really come out for us. The first one is collaboration, and both Sucharita and Martin have mentioned that already today. Innovation comes from competition, of course, but collaboration is just as essential and maybe more essential as we move forward. From an American Express perspective, we're no stranger to collaborative partnerships. Indeed, that's what we're most known for. Whether it's British Airways or Starwood, we know how transformational these partnerships can be for the long term. More recently, we're entering much more innovative, highly, newer types of partnerships. For example, we've partnered with Santander and Ripple to deliver market blockchain-based international payments between the UK and the US. That partnership was a learning experience for all of us, and what we see is large firms like American Express that bring trust, security, and the customer relationships, fitting very well with the young fintechs who bring new ways of working and often a ready-made testbed for experimentation. I certainly expect the pace and intensity to increase, and the UK is a particularly interesting area to watch with the FCA's sandbox approach. We're ready for this at American Express. We've established our own VC arm, and we've already invested in something like 40 companies globally. So the last trend is around choice. Technology barriers to entry are coming down, but the question we need to pose is, are the regulatory ones coming down fast enough? At Amex, we're big believers in choice. We recognise the need to demonstrate value to our customers and to our merchants. When people have real choice, the results are good. The technology barriers to entry in the payments sector have come down. The shift to mobile payments, general digitalisation of commerce is making it easier for new, innovative entrants to come into the marketplace. The introduction of the new payment integrators may well be another interesting space, but it's still too early to tell. This should result in more choice for the customer, more choice for the merchant, which will in turn drive innovation and deliver benefits to consumers, businesses, and the economy as a whole. I hope that it does. However, this should be the world that we need regulators to help us create. And it will make us work a little harder, but it will be a good thing. So in my finishing comments, innovation is core American Express. It always has been. We fully expect to be a company which will be successful and one of the winners in navigating this next phase of innovation. Thank you.